Welcome to a session in which we will take a closer look at day book and also month book, which are very important records for a business. You will remember that in a day book, the business owner records and tracks daily transaction in a business. We typically divide these transactions into 6 different sections. Let's look at these sections one by one and also understand the specific transactions a business owner must record within each section. The first section of the day book is about balances of the cash box, online wallet, and business bank account. In this section, we record 2 things every day for each of the 3 types of balances. The first is the balance at the start of the day, and the second is the balance at the end of the day. While some transaction in business may take place using notes and coins, others may take place using checks and digital channels of payments. Hence, it is important to keep track of balances of cash box, online wallets, and bank accounts to get a full picture of the cash used in the business. The next section of the day book is called credit given and amount received. Here, we record 3 types of transactions. The first is about the amount of sales done on credit on that day. The second is the amount received that day from debtors who had bought things on credit in the past. The third is also about the amount received that day from debtors but through online wallets. The next section of the day book is called credit taken and amount paid. Here also, we record 3 types of transactions. The first type is about the amount of raw material brought by the business on credit on that day. The second is the amount paid on that day by the business to those creditors who had given material on credit in the past. The third is also about the amount paid on that day by the business but through online wallets. The day book's 4th section is about advances given and taken. It has a long name. It is called advances given to the suppliers, raw materials received for it, advances taken from the customers, and products delivered for it. Here, there are 6 types of transactions. The first 3 are related to the raw material transactions with suppliers. The first item within this is about advances given by the business to the suppliers in cash on that day, and they are expected to deliver the raw material in the future. The second item is the same as the first one, except the advance payment is made through online wallets. The third item is about the amount worth of raw material received by the business from the supplier on that day. This is against the advance amount given by the business in the past. The last 3 types of transactions in this section are related to the advances received from customers. The 4th type within this is about advances taken by the business in cash from customers on that day. The business is expected to deliver products or services for this amount in the future. The 5th item is the same as the 4th one, except the advance payment is received through online wallets. The 6th type of transactions is about the amount worth of products and services delivered by the business to the customer on that day. This delivery is for the advance amount given by the customer to the business in the past. The 5th section is about those cash transactions that directly affect the P&L of a business. This section is called revenues, costs, other costs, and other income. The transactions in this section are divided into revenues-related transactions, cost-related transactions, and finally, those transactions that are related to other income and other costs. Let us look at each of these subsections one by one. The revenue section transactions are about the sales made on that day for which payment is also received on that day, either in cash or through online wallets. The cost section has transactions which are about various costs of the business incurred on that day for which the payments are also made on the same day, either in cash or through online wallets. These transactions typically fall in 8 areas, which are raw material, owner's salaries, transportation, workers' wages or salaries, utilities such as electricity, water and fuel, rent, repair and maintenance, and finally, interest paid on loans. The other income transactions include money received from the sale of scrap material, interest earned from the bank, penalty charges collected from the customers, etc. Other cost transactions may include penalty paid, contribution by business to social causes such as flood relief, etc. The final section of the daybook is about those transactions which directly affect the 3 parts of balance sheet, which are assets, liabilities, and net worth. The assets related subsection begins with cash deposited and cash withdrawn from the bank account of the business. The subsection continues with transactions related to purchase and sale of assets such as machinery and equipment, furniture, computers, and building. The last set of transactions in the asset subsection refers to security deposit paid and received by the business. The liabilities related subsection has transaction about taking and repaying of loans. Finally, the net worth subsection has transactions related to capital added or withdrawn by the owners and grant amounts received by the business. It is important to note that the sections and the transaction types of the daybook we have seen here are the most common ones that we come across in different businesses. It is possible that depending on the business, we may need to consider some additional transactions. In such cases, we should modify the daybook template we have discussed here to include those transactions. You may remember that we briefly looked at month book. This record has the same sections, subsections, and transaction types that we saw for the daybook with a few minor differences. These differences are in the first section concerning balances of cash box, online wallets, and business bank account. These are for the beginning of the month and the end of the month. The only other difference is that for every transaction type, there is only one number, which is total value of those transactions in the daybook for the entire month. Let's take an example to understand this concept. We looked at a type of a cost transaction for repair and maintenance. Let's assume that a business spent rupees 500 on the 1st, rupees 700 on the 7th, and rupees 200 on the 15th day of the month on some repairs. Then, the daybook of that business on the 1st, 7th, and 15th day will have rupees 500, rupees 700, and rupees 200 entries respectively. The month book for that business will have just one entry of rupees 1400 for repair and maintenance. To summarize, in a daybook, the business owner records and tracks daily transactions in a business. We typically divide these transactions into 6 different sections. These are balances of the cash box, online wallet, business bank account, credit given, credit taken, advances given and taken, P&L related transactions, and finally, balance sheet related transactions. We can think of the month book as a summary of all the daybooks of the business in a given month. That, in a nutshell, is about the 2 important records of a business called daybook and month book.